Dear students, I welcome you on behalf of Thakur Vidya Mandir High School and Junior College for the remote teaching learning process, where our motto is let learning be a joy and teaching a pleasure. Let us now move towards part 10 of chapter number 2, Sources of Corporate Finance, wherein today we are going to understand about commercial bank. Let us move towards the 10th question, which is what are the schemes for disbursement of credit by bank, or explain the role of commercial banks in corporate finance. A joint stock company can raise sources from various sources to meet its short and medium term business requirements. Among this, commercial banks plays a predominant or an important role in providing short-term as well as medium-term finance to corporate houses. They assist the corporate enterprises in the following ways. Firstly, they grant term loans, that is loans ranging from short term to long term to the joint stock companies. Secondly, these commercial banks also subscribe, that is, they invest money by purchasing shares and debentures of the companies. Thirdly, they also help the finance organizations by providing necessary underwriting of securities. Underwriting of securities, in that case, they give a guarantee to subscribe or purchase the unsold shares or debentures of a company for a certain consideration. In the previous year, we have already learned that a joint stock company has to raise a minimum subscription amount. If it is unable to do so, in that case, the entire procedure relating to issue of shares gets cancelled. So, in order to be on a safer side, the companies appoint underwriters, and these underwriters give a guarantee that whatever unsold shares are left out, they will be buying those shares. So, commercial banks also perform the functions of underwriting securities for the joint stock companies. In this way, commercial banks play a very important role in financing the corporate houses. Let us now understand the various schemes which are offered by the commercial banks for disbursement of credit. The first is overdraft facility. Overdraft facility is granted to those companies which have current account with the bank. In this case, the borrower can withdraw the funds from the current account as and when required, as it does not impose any restrictions on the number of withdrawals. However, it can overdraw only up to a credit limit which is sanctioned by the bank. Further, the bank charges interest on the basis of the actual amount which is withdrawn from the bank. Thus, overdraft facility is considered to be a short loan facility which is provided by the commercial banks. All the corporate houses definitely have an advantage of this facility, as it is a short-term loan facility which is provided by the commercial banks as and when they are in need of funds. Let us now move towards the second scheme, which is cash credit facility. Cash credit is considered to be one of the most important and popular form of financial assistance which is provided by the commercial bank. Cash credit is same as overdraft facility, where a borrower can withdraw amount up to a stipulated limit based on a security margin. However, the basic difference between cash credit and overdraft facility is that cash credit facility is given against pledge or hypothecation of stock of goods or other current assets, whereas overdraft facility is given against security of fixed assets, which means that in case of cash credit, the business organizations are required to provide stock of goods or other current assets in the form of security. However, in overdraft facility, they have to provide fixed assets as a security. Lastly, Interest is charged on the outstanding amount which is borrowed and not on the credit limit which is sanctioned by the bank. So, cash credit is another short-term credit facility, loan facility which is provided by the commercial banks. Let us now move towards the third scheme, that is cash loan facility. The commercial banks also provide cash loan to the business organization to meet their short-term financial requirements. In this case, the total amount of loan is directly credited to the borrower's account by the bank. Further, interest is paid on the actual balance which is outstanding. Let us now move towards the last one, that is discounting of bills of exchange. Bills of exchange basically involves two parties, that is drawer and drawee. Drawer of the bill is a person who sells the goods on credit to the drawee. Thus, drawer is the seller whereas drawee is the buyer. The drawer draws a bill on the drawee for the goods sold on credit. This bill specifies a future date, that is due date, on which the drawee has to make the payment. Thus, drawee can receive money from the drawee either on the due date or after due date. But if the drawer needs money before date, then he can discount this bill with the bank, which means that he can sell the bill to the bank. However, the drawer receives less money than face value of the bill as the bank deducts discount on the same, which means that the drawer won't receive full amount of the bill. He would receive a lesser amount than the bill amount. Thus, bills of exchange are the trade bills which are accepted by bank and cash is advanced against them to the business organizations. In this way, through discounting of bills of exchange also, a business organization can raise short-term credit from the commercial banks. So, basically there are four schemes for disbursement of credit by the commercial banks, and this involves overdraft facility, cash credit facility, cash loans and discounting of bills of exchange. So with this, dear children, we have completed a short note on commercial bank, or the question could be asked as schemes for disbursement of credit by bank. Thank you, dear children, for your patience listening.